In this Forex video journal, I'm going to discuss to myself how I should be reading and things I like to look at on the 1 hour chart, and how I should build a system, build a method, build a way that this is the way that I should continuously look at the 1 hour chart. Because over time I found that if I do it in a specific systematic way, I see the chart unfolding clearer and better. These are not trade recommendations. Trade at your own risk. Past performance is not a guarantee that it'll happen again. And the purpose of these videos is not to train anyone or tell anyone how to trade. They're for myself to see what it is I'm thinking, and so that I can become, I can evaluate myself better. So in this video, I'm going to try to stay focused, and I only want to talk about the 1 hour chart setup. And what are the things I keep on my 1 hour chart? The basic things is I show the time, days of the week, and a weekly divider. In terms of indicator, I will throw on only the Ichimoku cloud and the 100 and 200 EMA. The 100 and 200 EMA along with the cloud, they give me the trend direction. So when price is above the cloud, I would only be looking to take long trades, and when price is above the 200 EMA, above the 100 EMA, and they're in the right order, then again long. And then if it's going to be short, the opposite. Price would need to be below the cloud, below the 100, below the 200, and the 100 below the 200 as well. When it's lined up in that order, then it tells me we're in a downtrend. Only be looking for short positions. And then when those things get violated, that's when it tells me things are looking to turn around. Okay. Screen share. Screen share. Dynamic market scope. So I'm going to look at the 1 hour chart on the major currencies, and we'll start on the daily chart to draw in some levels. So I'm going to use the red horizontal lines as major boundaries. And we can see that this pair Aussie is in a downtrend. Go to the 4 hour chart. And clearly this is still in the downtrend. So I would be thinking I need to look for short trades. And I could put in here, this is a lower high. So what am I doing right now? I'm not doing anything other than labeling my chart, seeing what's happening. So I could see this is a downtrend. Go red to indicate down. That's all that is. It's not a trend line or anything like that, just showing me that price is moving that way, moving downwards. Lower high, and I could say this was a nice impulsive move here, and I could drop in that. So clearly looking at this bigger move and then the short-term move, I would now be looking for areas that I could potentially build a case to take a short entry because we are trading down short. So we know that one common place that price likes to reverse is a 38, and in this case at present it doesn't look like the 38's holding, and I have ways of filtering out that yes, 38 looks to be holding. I'm going to drop down now to the 1 hour chart on this, and clearly from the 1 hour chart it's still showing me that I'm in a start clearly from the earlier timeline. It's telling me that I'm in the downtrend, so I'm still going to be looking for down trades. Give me a little bit better contrasting colors there. Okay. So all of last week, there was 2 impulsive moves down. There's one, and then we have the second one here. And now this lower high here was from the 4 hour chart. But I'm going to put another lower high here. Coming off of the 1 hour chart. And both of these are qualified because they both produced a new lower low down here. So a new lower low has been made. A previous lower high is not broken. So we would, I would be looking for trend continuation signals. I would be looking for this pullback trend to show somewhere that it's ended. And one way to do that, for example, when price started moving back up here, at no point in this move since 2 o'clock in the morning has price indicated that it's ready to come back down and resume the downtrend. And the way it would do that is by breaking a previous lower low. So you can see here a previous low of a candle. So in this pullback so far, each of the bars had new, did not come below the previous bar's lowest low until this bar here. This bar here came below the previous bar's low, and to be disciplined in this, when you see such a move here, you see a bar like that, then you say, I'm going to wait for it to close, and then based on how it is, the next bar, I'm getting in on the open. So if this bar had continued black and closed black and say close down here, at that point I could say the previous bar's lowest low has been broken and prices come back and close below that, so this pullback is over, and therefore I'm going to get in on the open of the next bar and go back down that way. But because I've learned from previous experience that I need to wait for the bar to close. By the time the bar closed, it's only a 1 hour bar. By the time the bar closed, we could see that this very short term bull trend is still in effect, and therefore we would be skeptical to take a trade to the short side, even though the downtrend, the trend overall is down. And boom, you would have seen you're in 1 o'clock bar, 2 o'clock bar, price still kept moving up. This is us 12 o'clock in the day on Monday here. So what we would need to do to know that this trend is this overall trend down is going to continue down is to see a reversal signal of this very short-term trend, to see a continuation signal that, okay, price is ready to come back down. And as an example, you would want to see something like this. You see here we had price moving up, cancel, price moving up here, just like it's doing at present time. But notice how the signal to go to go short again, to say that this reversal is over and price is going to continue back its way down, does not come until this bar here, which is the 5 a.m. bar. Why? Because that's the bar where you get a close below a previous lowest low. To be even more patient, the better bar would have been one of these guys here. Because why? Because now you're close, you see you move up, and you can't, it's not going up higher. It is not setting. This lower high is not being set, and it's not going up and closing above this. You can see many hours, 1, 2, 3, 4, 5, 6, 7 hours of trying to get a new higher close, getting a higher high here, but it comes back down. Again, you wait for the bar to close, it comes back down, and you're starting to see, okay, this is really, no higher closes are coming. So if I get a close below a previous lowest low, then it's telling me the trend has a high probability of continuing back down. And that's exactly what I'd be looking for over here. And that hasn't happened yet. Similarly, you had a little bit of a move back up here, and the downtrend did not come until this bar here, the down that we're going to resume or continue back into the downway until this bar closed. Because why? It closed below a previous lower low, telling us that we want to resume into the downtrend. And look at when you wait for that, look how quickly your moves are, rapidly the moves are. Boom. So that's what the Aussie looks like. So the Aussie at present looks like it's in pullback mode without a signal yet to continue into the downside. Let's quickly go over into another pair, and I can see that with the euro, it is moving down, and the previous lower high is there. Draw that there like that. And now prices that's still in place. Price is moving sideways. Oh, back over here, I wanted to throw in the 100, 200, see. So this looks like it's moving up. It might go and hit the 100, might get in between the 100 and 200. So this pullback has still got more to go. But again, with when you took this short here, and you took the short here, and you took the short here, you're taking it because you're seeing previous lows of a previous recent bar getting broken, closed below, and it's also in the direction. See, you want to trade short because the trend is not going to change too long until price breaks the 100 and trades above the 100. Price breaks the 200 and trades above the 200, and you see the 100, 200 cross to the upside. This is not to say you take your entry when the 100 crosses the 200. They use the 100 and 200 to tell you the direction that you should be trading in. And if we go back, look at this. Look at one in the Aussie dollar on the 1 hour chart. It's been 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks of moving down, and the 100, 200 EMA has been telling you for the past 6 weeks, only be looking for short trades.